Ladies and gentlemen, welcome to the Fiscal Philosophy YouTube channel. I have been long PayPal for quite some time, and it has sit there kicking around in the account, not really doing a whole lot. However, I initially bought it primarily because it was cheap and there seemed to be a lot of potential to unlock, but I have held it for this amount of time simply because I have a pretty high degree of faith in the new CEO, Alex Chris, since he has taken over. There have been a number of strategic shifts into what I view at least as the right direction for the business. They have an attractive valuation still, and of course, they have their beautiful buyback program plus renewed potential in fundamental growth in big things like Venmo and their Braintree business. A substantial amount of PayPal's top-line growth over the last handful of years has come from Braintree. However, there has been a bit of an issue with the policy of bringing on any revenue, even if it's not profitable revenue, which has been sort of weighing down on PayPal's overall margins. Alex Chris has decided that they're not going to do it that way anymore. And so you notice in Q1 of this year, when they reported that there was a substantial deceleration of revenue growth, almost down to nothing. This is something that I think Alex Chris made it pretty clear that they were going to do ahead of time, that they were going to focus more heavily on profitability, especially regarding Braintree, rather than just prioritizing the top line. This has been a deliberate strategy. Get the ship turned around and correct course, make the adjustments needed, and then get back to growth in Braintree. But this time, the focus should be on profitable growth that actually contributes to the bottom line of this business, thus leading to growth in the fundamentals, which the stock is already cheap based on multiples of the fundamentals. And if we agree that that growth can reaccelerate profitably, then the stock will very potentially see a re-rate in its share price. After discussing valuation with various people that I trust, if they do deliver on this reacceleration in Braintree, we could be looking at a stock that re-rates into the low 100s. And that would not necessarily be at all unreasonable for a company that produces as much cash flow as this company does, that's actually still growing. At the moment, if you look at the forward PE, for example, it's something like 13 times. Is a company that's growing, that has good margins, etc., only worth 13 times? That's the question. In the meantime, while the valuation is still relatively cheap, PayPal can deploy their enormous amount of cash in order to drive down the share count using buybacks. PayPal is both a value play, a buyback play, but also a fundamental growth reacceleration play, all in one. And I'm thinking that this will eventually create a virtuous cycle where we do see a rapid compounding, as this is turning into somewhat of a coiled spring. At least that's my sense of it. The market just has to be convinced that the plan is actually taking shape. And whether you look at earnings or free cash flow, forward or trailing, PayPal is at some of the cheapest valuations it has been at, really, in years and years and years, if not ever. Yet, at the same time, we're looking at an inflection point where growth and profitability are going to go in an up and to the right kind of fashion, a reacceleration and an improvement in profitability. I would expect good things And that is why I do continue to hold this name. Please comment below if you're also in PayPal and any thoughts you have on the matter. Also, make sure you do the algo things like subscribe to the channel, like the video. Also, my Discord is linked in the description if you want to talk about stocks more regularly. Also, we do have a live show every Saturday, 8 p.m. Eastern, Cashflow Kings Live. We're coming up on our 100th episode, so make sure you tune in, ladies and gentlemen. Have a wonderful Friday. See ya.